In today's video, we will be exploring a free indicator that has been developed by a millionaire trader, known as the DD Index. This particular indicator has been known to generate impressive profits and has been gaining popularity among traders. In this video, we will delve into what the DD Index is, how it works, and how you can use it to enhance your trading strategies. So, if you're interested in improving your trading performance and adding a powerful tool to your arsenal, stick around as we dive into the world of the DD Index. The DD Index is a technical indicator used in trading that combines three moving averages and a relative strength index, RSI, to provide signals for potential trading opportunities. The indicator was developed by Brazilian trader Odir Aguiar in the 1990s and is named after his daughter, DD. The DD Index consists of three moving averages, a short-term moving average, a medium-term moving average, and a long-term moving average. The Relative Strength Index, RSI, is also incorporated into the DD Index to provide additional information about the strength of the trend. The RSI is a momentum oscillator that measures the speed and change of price movements, and it ranges from 0 to 100. A reading above 70 indicates an overbought market condition, while a reading below 30 indicates an oversold market condition. The DD Index generates trading signals when the moving averages and RSI align in a certain way. When the short-term moving average crosses above the medium-term moving average and the RSI is above 50, it is considered a bullish signal. Conversely, when the short-term moving average crosses below the medium-term moving average and the RSI is below 50, it is considered a bearish signal. Traders can use the DD Index to identify potential buying or selling opportunities, as well as to confirm the direction of a trend. However, like all technical indicators, it is important to use the DD Index in conjunction with other forms of analysis and to be aware of its limitations and potential drawbacks. So, without any more time to waste, we are going to see the strategy that we are going to use in this video. We are going to add two more indicators to take exact trades. First, we are going to add the Kijunsen indicator created by Erwin Beckers to our chart. And in inputs, we are going to modify our period from 26 to 30. And in style, we are going to modify the color to white and the opacity to 100%. And we are also going to add to our chart the indicator neglected volume by DGT. In the style section, we uncheck everything except the relative volume histogram. And we are also going to modify our DD Index indicator. We modified the short length from 3 to 7. We modified the medium length from 8 to 15. Changed the long length from 20 to 30. And you already have the configuration of our strategy ready. Now we are going to explain how the strategy works. We are now in Bitcoin with a 4 hours time frame. The conditions for taking trades in this strategy are easy. We will see an example of a long trade. First, the price must be above the Kijunsen. Second, the DD Index should show us a bullish signal. This is seen when a green dot appears at the cross. Third, we must have enough volume. That is, that our volume indicator is green. Once these conditions are met, we will open a long trade. We set our stop loss at the closest swing low, and our take profit will be a risk-reward ratio of 1 to 1.5. We see that it was a winning trade. Now we will see an example of a short trade. Now we are in Eurodollar with time frame of 15 minutes. We will see how to take a short trade. First, the price must be below the Keynesian center. Second, the DD index should show us a bearish signal. This is seen when a red dot appears at the cross. Third, we must have enough volume. That is, that our volume indicator is red. Once these conditions are met, we will take a short trade. We set our stop loss at the nearest swing high, and our take profit will be a risk-reward ratio of 1 to 1.5. We see that it was a winning trade. Now we will see other examples. And as we are seeing, this strategy works in different markets and different time frames. Before continuing with the video, I would like you to subscribe and like the video, because at Magic Indicator Strategies we strive to provide you with quality and easy to understand information, and that way you can be aware of our future content. We are now at SP 500 mini futures with a time frame of 5 minutes. We will see an example of a short trade. The price is below the Keynesian center. The DD index shows us the bearish signal. We have enough volume, so we take a short trade. We set our stop loss at the nearest swing high, and our take profit will be a risk-reward ratio of 1 to 1.5. We see that it was a winning trade. Now we will see other examples. We are now in the Dow Jones Industrial Average Index, better known as the US 30, with a time frame of 1 minute. We will see an example of a long trade. The price is above the Keynesian center. The DD index shows us the bullish signal. We have enough volume, so we take a long trade. We set our stop loss at the closest swing low, and our take profit will be a risk-reward ratio of 1 to 1.5. We see that it was a winning trade. Thank you for watching this video on how to use the DD index indicator in this trading strategy. We hope you found the information valuable and that it will help you make better trading decisions in the future. Remember, the key to success in trading is to have a solid plan and the discipline to stick to it. So go out there and put your new knowledge to the test. We wish you all the best in your trading journey, and may the markets be ever in your favor.